To expiry days. On expiry days, our main motive could be some people just intraday options like they do regularly. However, most people what they try to do is they try to pick an option and try to make it go to zero because options are expiring on that particular day. This makes expiry days very important. So every Thursday is pretty important for a day trader because you have the potential to make money, right? So suppose you find an option for around 50 bucks or something, and it's a nifty option. You have the choice of shorting that and making it go to zero, right? So anyway, all I recommend is option selling, and Thursdays especially can be very crucial if used correctly. So now let's just look at how to draw support and resistance lines again, and how to make sense of how we should have traded during the past expiry day, using that as an example. Okay, so far, what is support and resistance? Support and resistance, a resistance is a certain level which caused the price or the trend to change from an uptrend to a downtrend or downtrend to an uptrend. So, for example, looking here, is this is are all these points that you see here are all of them important? Not really. Anything which caused the trend to change and to change significantly. So in the first day, you basically can't really see any significant point where the trend changed because you only had one trend. The only trend was upwards, right? There was some correction here, but that's not really that important, right? This level can be important because that was the lowest point of the day after the open, right? So that has some significance. That's the only point that you have, correct? So this and this could be the only important days of this day, apart from whatever high the day made. Different resistance lines for the Thursday as well as the next day, which is about to happen. So we'll just be looking at the data we already have before us and try to draw the lines, right? So this line is clearly important. As we've mentioned, gaps are extremely important. Now, where do you draw the line? Should I draw the line right here at the topmost point, or should I draw the line right here where more candles are touching the point? The important thing here is try to join as many lines as possible. Okay, and again, it doesn't significantly matter whether you draw it here or here because it's just a zone anyway. So we are drawing a line here, but even if the price comes somewhere around here, we are still in that zone. So I'll still be considering that as resistance. So if I am short and the price reaches somewhere here, I will be thinking about what to do, right? If the momentum is slowing down, I might just exit the trade because there could be a retracement and then the market might fall down again, correct? Because this is very important. Now the next line that we clearly have in this day is this one, because this is the lowest point of this particular day, and on this particular day you didn't have any downtrend. The market just kept going upwards with no significant movements, right? And the next day we can clearly see the day's high. Again, I draw it here. I usually ignore the wicks. Now I'm not zooming in or making too much effort to correctly place it because it doesn't really matter. I'm not going to trade just when a wick touches this point or a candle touches this point. I am not going to trade. So suppose the market is an uptrend and I want to go short because the momentum is dropping. I will be waiting even if it crosses upwards, even if it crosses upwards by another 20, 30 points. It doesn't really matter. That's still a resistance zone, correct? Now on the next day, the lowest point, oh crap, yeah, the lowest point is here. This again could be important because this is the low the rally has made so far. Now, as for any other lines, whether this one is important, this one, we can probably see that here is when the trend changed. So we were in a downtrend, right? Price moved upwards. This line again could be important, but I'm not really going to draw it, right? Because nothing significant happened. So here, this line is important though, because the price tried to move up, nothing happened. Price tried to move up, nothing happened. Again, it got pushed down and the trend changed. So this is a significant uptrend and the price crashed down. So this becomes important. Now again, I will be ignoring the wicks and just drawing the line here, right? So these are all the lines I have currently, and nothing else is important. This isn't important, nothing else is as significant. You could, if you wanted to, add another line right here. So now let's see how these lines perform and if we can take any trades based on that. A bit confusing and extremely difficult to predict because the market had somewhat of a lower opening. It pushed down, but then it finished higher up, right? So this is pretty confusing in the sense that there is buying pressure, but initially there was selling pressure as well. Selling pressure from both SGX Nifty because it opened below the previous day's close, right? And then you had buying pressure when the session opened. Now, again, let's just see how the market behaves. and how the first 5-minute candle is broken. Is it broken below or upwards, right? You can clearly see the market immediately, the second candle is upwards. And you have a clear uptrend which is now established, a very strong uptrend as well. Because look at the number of red candles here, look at the speed with which the candles are going, right? So this is pretty obvious that to stop this uptrend, it will take quite a bit of power, right? You see it forming a bit of a range. Market comes down. This is where this is where usually you can get scared, or you should get scared, because the entire last up move has now been taken over by sellers. So this could now continue onwards all the way down to this support level. Fall down all the way is because this up move has been pretty strong, right? And see the height the up move has reached. The up move has, almost reached the path from where the down move started from. So the buyers have come in strong and have almost erased everything the sellers were able to do. So again, the markets are again starting to trend upwards. You don't see anything being formed here. Now this is just a wick, so we can just ignore this. And this point is now confirmed to be our first low of the day, right? So this is the high, this is the low. If the market breaks through this level, that's when we now become bearish. Market goes up, now it's trying to make a new higher high. Let's see if we can make that. Okay, these are all bullish trends. So far, we have a very strong bullish trend behind us, right? Our long-term trend, which is the trend for the past couple of months, has been completely bullish since Nifty has risen up from 7,000 all the way up here. Just to just buy, especially if this new high is also broken. The markets are trending upwards. You see small candles, but then you don't see any sign of sellers, because even if you look at the wicks, even the wicks indicate buying pressure. Every time the price is moving downwards, sellers are always coming in. Sellers are in complete control because it is an uptrend, right? So you have to look at everything based on what the context is. So if these candles, small candles like this were found in a range, that would mean something different. But after a significant uptrend, when you see candles like this, what it's basically showing you is the buyers, whoever bought this level, hasn't really cashed out, right? Where for them to cash out, they will have to close their position. And so far, we haven't seen any signs of anybody exiting that position, since you haven't really seen any downtrend or retracement. Market then, then you have a couple of small red candles, but then it's not really near an important support or resistance level. This is where it gets interesting. Now the market has now pushed through whatever was the previous day's point where the sellers came in. That has now been breached by buyers. So everybody who had been hoping for a sell is now pretty much out of it, right? This is where you have to judge. Will the market break this next? Will the market break this level? If yes, you can take a position, provided your risk management is good enough, right? And attempt to hold the position until your next resistance level is reached. Your stop loss can be somewhere around this level, because obviously the markets can somewhat retrace. If you want to be very conservative, your stop loss can be just below this green candle, because that was the last significant up move. Okay, we see the markets going up and it touches our level. So this could have been a pretty easy trade to predict, where you can see that using support and resistance lines, you can see exactly what your reward is. So you can even set stop losses properly, which is very important. Now another thing, should you exit here? Just because it has hit a certain level, should you just exit? Don't you think that even if this was the point at which all the big boys or institutions wanted to exit, retailers who had been seeing the market go up all the way from here, they might just have been buying all the way throughout. So don't exit a trade just based on a certain level or zone. Exit a trade when you see a reversal in the trend. Support and resistance works. So as you can see, it is not completely exact, right? The market didn't really stop right here. Our line was drawn somewhere here, but it does give you an idea of what is about to happen, or where the market could have significant changes in trend. After some profit booking, again, the market starts going upwards and it goes even higher up. At this point of time, we're in uncharted territory. The market is now making new highs, right? And this is the point of time where it's best to just see and wait what the market is doing before taking up any trades, because you don't really know whether the sellers might come in or no. Because remember, sellers at this level really smack the market down. So it could be that the same seller is still waiting. However, after such a significant uptrend, we don't expect such a big down move again, but we can expect sellers and buyers to maybe have a fight round here. The market goes down, uh, it comes all the way down over here. But again, this is not that significant because we've had such a strong up move and then very minimal retracement. We will probably think of it as a reversal in trend or or of taking a short position once it breaks this level, or at least both of these two big green candles. Market goes down, and again you can now see it start to move upwards. So you have formed a new lower low again, or a new low over here, right? Market again tries to push upwards, again trying to make a new higher high. But again, when it does, you can immediately see selling pressure start to come in. So these can be very tricky to trade. Market is maintaining a zone. Again, it tries to go higher up. And now at this point, you could have taken some sort of a trade. So the market has pushed upwards. Sellers now came in, and you are trying to see where the sellers can push the market down to. Can it reach this level? Can it break through? If it breaks through here, that might indicate a complete reversal in trend, right? So if it breaks through here, you might just look at the momentum of the downturn, and then think about taking a short position here. But right here, we can immediately see buying pressure start to come in. After such a significant uptrend, you are always looking to buy. You can't really short the position after such a strong uptrend, right? So after this pressure, you are waiting to see what the next candles do. And again, the candles have reached our resistance level. You can expect the market to now continue upwards, maybe even all the way up till here. Maybe you can expect the market to attempt to make a new day's high. And if you think that the momentum near the day's high is low, you can exit your position somewhere around here. This video has given you an idea of how to draw support and resistance levels, as well as how to trade using them, right? So one good example could have been this range formed right here, right? You could have entered a long position somewhere around here, correct? If you have any doubts, feel free to ask them in the comment section or on Reddit at r/Indianstreetsbets. Thank you.